Just flesh out the sort of year that you're expecting now, thanks to some of the geopolitics and the issues in the Red Sea.
Yes, I think before the issue really heated up in the Red Sea, we were heading for a period of oversupply and probably a lot of price pressure, which is what we had flagged already in our Q3 report in November. Of course, since then we have seen the situation unfold, and we see it continue to unfold in the Red Sea. The impact of this situation is causing new uncertainty for how this is going to play out from an earnings perspective throughout the year. We have very little visibility as to whether this is a situation that will resolve in a matter of weeks or months, or whether this is something that is going to be with us for the full year. And hence, the reason for this wide guidance is the high uncertainty that we're having with the situation that is live, unfolding, and still actually escalating as we speak.
Just unpick the commentary around pricing pressure, because we know prices have gone up thanks to the problems in the Red Sea. But what's your ability to pass on fully those price increases?
Yes, I think as you rightfully point out, the route that we have to sail now is significantly longer and will absorb some capacity in order to be able to guarantee the service. That has caused some anxiety, and prices as a result have shot up. This is something that we expect in the short run to be a bit touch and go with respect to how much capacity is available as the ships have to sail longer and there are holes in the schedules. That is something that we're going to spend the coming weeks and months actually plugging in. But over the longer term, we will see actually the integrity of the service be restored actually quite fast. This is not a repeat of what we have seen during COVID. It's fundamentally different. The supply chain is remaining fluid, and we will be able to get quite quickly to a situation that is in balance again.
Yeah, Vincent, it was lovely to see you. It was nice to see you in Dubai as well. But just want to clarify one last thing on that before we move on. The shipping groups pass on the cost, so you make lots more money out of... And I know it's a terrible human situation that's going on in the Middle East, but actually the longer routes, your margins are maintained, if not increased, because of this disruption to supply routes, isn't it?
Yes, I think in the short run, what you will see is an over recovery because we recover it on the shipments that are going through this, but we sign up for cost as a consequence of this that will stay with us for a longer time. So the ships that we're signing up or leasing now in order to plug the holes in the network, they will stay with us for a longer period than what this crisis is. So you will see some over recovery at the beginning and probably some under recovery towards the tail end of this, which... And how much and when will depend on how the situation unfolds. But it creates this distortion a bit. I don't think that from an earnings perspective for the industry or for Maersk, when you look at it in its entirety, that this is going to be something where we generate significant profit out of the situation. It is something where today the amount of cost that we're signing up for in order to keep the global supply chain fluid is still an unknown. So we have to try to find a good balance on that with our customers.